Hello, hello. How's everybody doing? Back at it with another video, IWC effects. I want to just go over briefly this week's trend that we had taken on the signals group and run it down, give a good recap as to why things happen and what led up to that to happen. If you know on the videos, I always talk about the market maker. I always talk about their cycle and how they run the markets. So this week we had a beautiful cycle leading up to the reversal that you can identify, you can see their playbook, and I'm here to help you guys see that playbook. So let's get right into it. So we're looking at the dollar index, right? So we're on a 15-minute chart. We're just gonna backtrack a little bit to see where we came from, right? So let's go to a 30-minute, and let's go to an hour, right? So we see here we had the dollar index give us a nice bottom before continuing that rise. And here the market reversed from this uptrend. So it gave us a nice reversal. Then from that sell-off, continue back being bullish, right? So just gonna label this, just give 2 points here and here. All right. So how the market runs is a playbook, and it's all induced by the contracts, retail traders, where the money's at. If there's a lot of buyers, the market's going to sell off. If there's a lot of sellers, the market's going to buy off. And it's that simple. You just have to identify, understand the playbook. So coming into this range that we were in, right, the bullish range, now we're selling off. How I identify the playbook, it's pretty simple, right? So we had a nice low point, and the market started giving us some bullish reaction. Okay, so from this low point, we had 1 day of rise. Market was straight bullish, gave us a short-term retracement. Following day, continue that bullish, which is a second day of rise. The market usually gives us a retracement after giving us 2 days of rise or 2 days of drops. And this is exactly the retracement that I speak of. This retracement to continue being bullish and breaking that point that it just came off of, that retracement. Okay. So we finally broke it here and double top, right? Gave a nice double top. Then the market started stalling here and consolidating. What that is known is as a reset, okay? Here we got a triple bottom, right? So the market was initially supposed to reverse and continue going back down, now giving us the opposite of this. They have 3 days of rise. Now we would be looking for 3 days of drop. What the market decided to do is, what did I say? If there's too many sellers, the market is going to continue going up. If there's too many buyers, the market will continue going down. So give me 1 second. Get back. So this as in this example, too many sellers. Why? Here, right? So they're following old trend. Retail traders are following this old trend when the market already decided to reverse at this point. He decided to now continue being bullish, which is the real trend, right? That's the real trend, market to be bullish. So here, we had a reset. Market decided to continue is bullish. So we're going to follow it just as we did here. Market reset here, gave us a triple bottom 1 day, the second day, the third day. So 3 touches to this low is a triple bottom, not being taken out. The third day, just wicking it and coming back up, and now finally breaking level 3's high. So now we're going to follow it. Level 1, retrace, continue, level 2, and we go straight up, level 3. We're at previous price action range because that was previous high That was a previous high. So this is why you're getting this type of behavior as well as being 3 days of rise. Now we have a lot of buyers involved in the market. Now the market makers are looking to reverse. They got all day buy side contracts trapped at the high. Now we're going to go ahead and look for a reversal. So today being today Thursday, right? So let me show you how the market runs. That was a previous, that was the high, hit it again, but let's give us a nice double top. So that's our nice double top high pattern that we're looking at, right? So now let's start labeling how the week occurs, right? So we got here, this is Thursday. We got here, Wednesday, and here being Tuesday, okay? Here being Tuesday, and the run on up here being Sunday slash Monday, okay? So this is the beginning of the week, and we have Tuesday, Wednesday, Thursday. So as the market was bullish, we know the market just can't be bullish or just can't be bearish. The market at one point has to reverse. And that is exactly what I told the signal group that we'll be looking for on the dollar index right here. So 613, what is 613? Which is Sunday, Monday, the beginning of the week. Let my guys know we should be getting a midweek reversal on the dollar index. So right here, it's a little frozen. What's going on there? It's okay. Okay, right here. So 1 day rise, 2nd day rise, right? You see I have it labeled as a reset, which is right here, reset. This was the 2nd day rise, beginning of the week. I said we should be looking for a midweek reversal. And we had a nice reversal coming along today, Thursday, already. And this is the thing what you want to do as a trader. You want to start to anticipate these moves coming along. And that's the only way you'll be able to prepare and execute when you do see it live. So we had this beginning of the week, letting my guys know we're looking for a midweek reversal on the dollar. GU we had sold last week, GU. Now we're going to be looking for, again, a midweek reversal on GU. Pound USD, 1 hour chart. We took this sell last week, gave a ton of pips. We caught 200. This gave about 500 to 600 pips. We was just really looking for 200. Market kept dropping, and we're not complaining. So here, GU, we're also looking for reversal, but we're going to talk about dollar. We're going to break down every EU, GU, AU as well. So here we had a midweek reversal, and this is, again, now you just follow the same move. So we finally had a break of the structure, right? Level 3. So now we got level 1. And what we're going to be looking for is level 1, level 2, level 3. That's what you want to be anticipating now for the drop. 1, 2, 3, get a nice reversal. 1, 2, 3, back up. And it's really that simple, but a little bit difficult in hindsight because a lot of people like to complicate things, and you really don't need to complicate things. I like to keep it short, simple, and stupid. Because if it's stupid, pretty sure you could understand it. If it's short, it's even better. And if it's simple, that's great. So here we have a midweek reversal on the dollar index. Anticipated it, lovely. We got it. Now we know what the market maker is doing. We caught his hand. He showed us his hand, right? So this is the dollar index. As the dollar drops, we have the major pairs rising. We'll have EU, we'll have GU, we'll have AU. All be bullish as the dollar drops, okay? Now we're going to go ahead and take a look at EU. Bada bing, bada boom. Okay, what do we have on EU? Okay, so from this range to this range, right? So this high to this range. What happened? What occurred? Okay, so the market, like I said, has to reverse after being so bearish, and it has to reverse after being so bullish. In this example, we have Euro USD. Euro USD was bearish from last week leading up to this week's midweek reversal. Just as how we had the dollar being bullish, we had EU being bearish. Now we have the dollar being bearish. Now we'll have EU being bullish. Okay. What I wanted to go over here, this example actually in all three, is how one pair would already be giving out the pips, right? While another pair is just stalling and chilling, waiting to break out, okay? And what I mean by that is Euro USD will be up here, while in another pair that I'm going to talk about, like AU would be right here working the low. Let me backtrack again. What did I say? While one pair may be dishing out the pips, so you already know, we already know that after seeing this double bottom and the market already shift, I'm already bullish on Euro USD. So this retracement isn't scaring me. It's actually giving me a better opportunity, not a better, another opportunity to enter the market if I did not. But me, myself, I don't take those trades. If I'm not in here, that's it. I missed it. That's just my discipline. If I'm not in here, I'm not in here. Maybe at a low risk, but most of the times I'm not entering again. If I missed a trade, I just missed it. And that's where I go ahead and go hawk, go look, go try to snipe another pair that's still in this range. So if I miss it, I miss it, right? So what I say, if EU already dished out the pips, bullish, the dollar index already showing me right here, continuing bearish, that he's bearish for sure, right? He's bearish for sure. So that's it. My bias is true. Now you just have to let the market play out. Just got to let it play out. So again, bias is bullish on the majors, bearish on the dollar index, correct? Here we have, again, a nice example of the dollar triple bottoming out right here. And we got the market finally dishing to the upside. Let's go ahead and take a look at GU. GU, it's a little difficult than the other pairs. The other pair is giving a great setup. EU, look at this triple bottom, great setup, right? Dollar index holding the high, great setup. We're gonna talk about AU as well, but don't want to show you that just yet, right? So this one, not so clear, not so crispy, right? You just have to know, you have to anticipate. I told you guys we sold this. Let's go ahead and show you on the main page on GU. Right, so we took this to the downside, right? So let's go back on the recap, take a look at GU, boom. So we already had known that this reversal was coming up, okay? So let's go ahead and look at the 15-minute chart. So this was Sunday, Monday, Tuesday, Wednesday, Thursday. So Sunday, Monday, they continue the bearish trend for the beginning of the week. Tuesday continued it again, created the low of the week. Wednesday, we got that midweek reversal. Now we're bullish. And how do we confirm that bullishness? Go ahead and double bottom the low of the day. Don't take out previous day's low. So where is previous day's low? Again, This is the period separator, these little dotted lines. So each day, the day begins here, ends here, begins here, ends here. Also, as I said, it's beginning. Day is beginning. Okay. So the low of the day is here. This is the low of the day. Market was up, came back towards the low of the day, failed to take it out. There's your W. Can't see it. Let's go put a line chart. Boom, bada bing, bada boom. So there we go. The market had held the low of the day on Wednesday, that midweek reversal. Nice and bullish. Boom, got your pips. What are we looking at from there? We're looking at from this second leg W, got 100 pips to the upside, right? Then the market decides to retrace for New York session. New York session retracement for the continuation. That's a typical setup. So from that high, retraced 80 pips and started to hold your 50 EMA. 50 EMA. Now, a lot of people like drawing fibs, so let's go fib retracement from the low to the high. Take a couple of these bad boys out. And what are we looking at? We're looking at a 50 to 618 retracement that we got on GU. Okay. So now when he's start being bullish, your light bulb switch is already going on. Aha, what am I now looking for, right? So what you'll be looking for is the next day for him to dive back into the range and give you a beautiful W. That's what GU did. Beautiful low of the day, which was here. That was the low of the day. He shifted away from the low of the day, went back to where sellers are selling. Okay, this is all about contracts wise. Why are we getting price action here? Because when we were previously bearish here, let me extend that here to trap the beginning of the week for 2 days of drop to continue it for 2 days, but now we're looking for reversal, right? And this range, good price action range where there's sellers stop losses above this range. So what are we going to do? When we're bullish, we're going to go up to that range, get retail traders to resell. They're looking at resistance. They like support and resistance. In this essence, this is resistance. They like to see that as resistance. And that's exactly what the market maker is confirming. He's validating to get the sellers involved. Sellers are seeing this pattern hit right back up, doesn't take it out. Sellers are selling. Once the market comes back into his range where lower level sellers were trapped, which was in this New York session consolidation end of the day range, here we have lowest sellers trap, 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 shift away from the sellers. Now, the next day, we're going to trickle right back down to that move. Why do they do that? Why do they do that? Most traders, retail traders, don't trade with a stop loss. So they'll let the market shift away from them 100 pips, still hold it, think that the market is now going to release them when he starts coming back. And he does that just to keep you in. Because now you're in, now I'm going to shift away from you. Again, 100 pips. Now you didn't learn your lesson then, so he's going to go ahead and trap one more time. So this price action range here, you're getting because you're by what? The high of the day, as well as this price action range of resistance, holding the high. What does the market do? Go ahead and validates that. Let's go ahead and get the retail traders in. Look at that red candle just dropping its hot. That entices traders to get in. That's where the FOMO feelings get involved. You don't want to miss this sell. That's a strong bearish candle. You're gonna look to get in. Let's say you had the FOMO, got in right here. What did he do? Back to the low of the day. He gave you to that low, about 30 pips, right? Back to the low of the day. And then he decided the next 15 minutes, I'm taking it all back. So from that low back towards the high, another 133 pips right back up. No sell is involved here. There's no market maker is not selling. He's buying. He's trapping retail traders. His sell run is finished, right? He had dropped what? How many pips? 660 pips. He has to dish off and start reversing, start coming back up. So now that I dished off 660, I already came back up 461. See how that's done? In 2 days, 2 days, when it took him 1, 2, 3, 4, 5 days to get the 660, in 2 days, he's already at 461, getting most of his pips right back. So now the market did was double bottom the low of the day. Double bottom the low of the day. He came in, hit it at 645, 715, confirmed. Here we had a nice bullish engulfing candle for a late entry at 8 o'clock. So this is very late because your stop loss would be the low of the day. But in this essence, you know, you're looking at, I'm putting it 20 pips. That's typically what we're trading, 20 pip stop loss. So I'm not looking for anything more than that. Taking that at the close with a 20 pip stop loss, you got about what? 9 pip drawdown, and then you got yourself 250 pips by the end of the day. Let's just say 200 pips, right? Right there is 200 pips. You got to go at 200 pips. Okay. Now, going back to the main reason why I wanted to do this video was, like I said, when one pair is already moving, letting you know the correct bias, which is I'm bullish. At double bottom, I'm already bullish. So this essence already bullish, but late, right? You missed the move. Like, damn, missed when he second touched the low of the day. Could have caught the second leg, coming right back up in this range. Let's just go to a lower time frame where we're looking at a 5-minute. 5-minute bullish engulfing right there. That's a better entry. Let's look at a 3-minute. Look at him hold that low at a 3-minute. Let's go ahead and look at a 1-minute. And what do we got on a 1-minute? Spike holding, coming back up. So 1 minute, better entry in this range than getting it in these ranges. Just a better little pullback, and then that's a nice railroad track candle to dish off to the upside. So better setup right there on a lower time frame, anticipating it at a higher time frame. So our bias is correct. We have GU bullish, we have EU bullish, but guess what? We missed both of these setups, right? So we went ahead and what did we do? I missed EU GU, so I went ahead and took a look at AU, okay? AU yesterday was straight bullish. Straight bullish. The low of the day was here. Created straight away from the low of the day. Short-term retracement, but couldn't go all the way to the low of the day. Just a little short-term retracement and then a little consolidation. We're going right back up to the upside. Saw that yesterday, missed that move. So what am I looking for today? Looking for the market to dive back into the range and give me a double bottom. Okay. What did I say? When one pair is already left the station, EU left the station, GU left the station around 8 o'clock, right? They left the station around 8 o'clock, 8:15. That's what EU and GU both left the station at 8 o'clock. AU, however, at 8 o'clock was still holding the low. 8 o'clock still holding the low. So we had initially bought this retracement, expecting the market to go back up. But what did he do? He hit the low one more time. And this is where we have a triple bottom, low of the day. So he hit it again at 9:45. Now remember, EU and GU already left the station at 8 o'clock, 8:15. They left the station. Right here, 7:45, 8 o'clock on GU. He's already out already from the low of the day. He's already 100 pips away from the low of the day, right? EU, 8 o'clock. This is a beautiful. So we said AU was ready by 9:45. So right here, this is what we're looking at while AU is holding the low. So I'm like, all right, I'm bullish on AU, just letting him work that low. So about 9:45 right here, 10 o'clock. So he hit that low. Now he's working the low. Hit it one more time. Closed with a bullish engulfing candle. We took a buy there, and we took another buy at the next bullish engulfing. So what did I say? If I miss one setup, I'm go ahead and I'm hawking, I'm sniping another setup. And that's exactly what we did. We called both of these out, right? So we took AU working the low, LOD, low of the day, GU and EU are behaving. So we got, we rebought AU. Had a sell on USD CAD too as well. We had rebought AU at the low of the day. See right there, bullish engulfing close. TP1 was at the high of the day. And we got TP2 a little bit above. So we bought it at the low of the day. Then we got a second entry, AU. We got a second entry. Like I said, second entry was this bullish engulfing candle. Let's go and to the other chart just so we could look at how he took those. Bad bing, right? So low of the day, bought at the bullish engulfing. We had a second entry as this candle was becoming bullish engulfed. Two entries. TP1 smashed. TP2 awaits. But how many pips are we up? First entry. What did it give us? It gave us 92 pips. Second entry as well, 97 pips. Over 200 pips, 192, 93, and 97, 200 pips that we got. That's why we got, once TP1 got hit for 50 pips, we had two entries. That's 100 pips that we got on AU on that single buy, single setup, excuse me, in a single buy, we got two entries. That was one setup, two entries. And then we had, as the market was continuing, we had 200 pips right there on this example, boom. 200 pips that we got on AU. So that's what I wanted to break down was when one pair already had shifted, EU shifted, GU shifted, went ahead and scouted all the majors. What am I looking at? I'm looking at EU, I'm looking at GU, I'm looking at AU, I'm looking at NU, I'm looking at gold. These are the pairs that I was looking at once GU, EU already left the station. Once the dollar already left the station, I already knew what I was looking for that price action movement. I was already bullish on AU, just got to let the market do its thing. And we did take some heat when we bought. When we bought here, we did take this heat, but guess what? He came back, boom, gave us the close and gave us the confirmation back-to-back close to get in again, and we got all our pips. So losing 20 pips, then making 200, it's never a bad day. That's a great day. It's a great day, and that's how you should be trading. Minimal losses, limiting the losses, maximizing the profits. And that's why I took two entries, maximize the profits. And this is a nice setup. It's clear, precise, timing, New York session. It wasn't ready here. He triple bottomed. Now he's ready. Candlestick confirmation, bullish engulfing. Came back with another bullish engulfing. And if you got ballsy, got another bullish engulfing, you could have got 3 trades right there, right? So there's one right here, one right there, and one right there. 3 entries. 3 entries to the upside all would yield you great profits for Thursday. This was a nice midweek reversal. Like I said, missed it Wednesday, caught it Thursday, paid out. Now we're looking for Friday for that continuation. Let's see if we could grab another setup. But this is ideally the type of plays you want to be looking for to catch once you already know where the market is headed towards. I already knew based on the dollar index, I'm bearish on the dollar. That means I'm bullish on EU, GU, AU, bullish on all those. Once the market gives you the pattern, you now then execute. Wait for the pattern, triple bottom, get the candlestick entry, which occurred at 10:15, got another entry at 11 o'clock, and could have caught another entry at 11:45. All New York session setups because during Asian, he consolidated. London, he was coming towards the low to create the low. That's what the market started doing during London. Straight bearish. That's a great sign after a bullish move when he's straight bearish, because now what you're waiting for is the low of the day to be created, to be tested, and not to be taken out. Low of the day created, low of the day was tested, wasn't taken out. Low of the day. So right here in this 50 EMA, he wasn't ready just yet. Had to come hit the low one more time. Now when he's ready, he's going to break out. He is bullish and break out of the 50 EMA. Here, he could have still tested. You see this bearish engulfing candle right there? He could have started to say, oh, I'm not ready. Come back down one more time. But this touch was the final move, that this candle, then the next candle was a bullish engulf, and now he was ready. It's all about timing. Bias could be correct. Timing may not be correct. And that's the thing with trading. You could have a correct bias, but just when the timing is that when you wanted it to happen, may not have happened. So I wanted it right here. Timing wasn't correct at that moment. It wasn't ready at that moment, but it was ready for EU and it was ready for GU. I understood that. So all I got to do is sit on my hands, wait for him to hit the low of the day. So I did get stop hunted for 20 pips. This was, he went 26 pips, right? So he knows where I put my stop loss. He hits it, but just like I'm not afraid to come hit him again. I'm not afraid to rebuy it. I knew, I was like, oh, hit it. Once I seen this big bullish, I'm like, aha, triple bottom, the low of the day, cool. New York session, cool. I'm gonna buy you here and I'm gonna buy you there, and we're gonna get paid. I'm not gonna care about this little 20 pip that I lost. And that's how you should be trading. You only care when you over leverage. When you don't over leverage, you don't care, because one loss shouldn't cripple your account, shouldn't cripple your emotions, shouldn't upset you at all. Of course, you're gonna be mad because you lost, but your judgment shouldn't be shifted. You shouldn't be like, oh, let me sell now because he hit my stop loss and sell, and then get fucked on the way back up because you was just emotional. That's what you have to eliminate. No emotions. Of course, the only two grand scheme of emotions in trading is greed and fear. You're scared to lose money, and you get greedy once you start making the money that you never made. So that's what you have to suppress that. Suppress those feelings, suppress the emotions. What can help you eliminate those emotions? Understanding proper bias, understanding proper play out, correct play out, understanding what the market does. Market makers do the same shit every single day, every single day, every single week, month, same plays get taken. I take the same trades. I call the same trades. It's the same thing. Nothing changes. We take the same trade. We sell, we buy, we sell, we buy, we sell, we buy, we sell, we buy. We sell this. Now we buy. Another trade that we taken. That I could actually talk about. Okay, here's a nice example of, this is an intraday setup. This is on the dollar, right? We had double top, market come down. Once the market retraced, right? Market retraced towards the high, didn't take it out. I'm bearish. Now, this is where the market reset and didn't take out that zone, which was right here. See the intraday, 1, 2, 3, came back down to the low. I expected a break, didn't break it. So what is that telling me? Too many people are buying that he doesn't, excuse me, too many people are selling that he doesn't want to give out those pips. So let's go ahead and hold these lower level sellers that are trapped down here trying to take this break. Hold them in. Again, show another double top. Let's hold them in again because what? We now created a triple bottom and we can't take out this price action. Can't take out this low, which is typically 102. Couldn't take out 102. Just hit it. Couldn't take it out. And then now we are bullish. So that was an example of a nice reset seen live. Okay, you again, this doesn't happen overnight. This is from trial and error and experience of seeing how the market maker plays. I don't overcomplicate things. I don't try to sugarcoat things with different names and bullshit because it's all the same thing. I've been trading the same patterns since I started trading 2016. The same patterns, same thing. Nothing changes. Nothing at all changes. It's the same pattern repeatedly over and over and over and over. It's all about identifying and being prepared to execute once you see it live. You can't choke up. You can't freeze up because then you just missed your trades. You missed your setups. You missed a nice entry. You have to execute. You have to adapt. If the market, again, here we adapted. Market, we wanted to sell. Market stop. Okay, we adapt. Now the market is bullish. And it's that simple. Market is now bullish. Now we're looking at EU, GU sell-offs. EU sold off, GU sold off, as well as AU sold off. Now we're looking for reversals. Now we're bullish. Now that we got the bullish sentiment, we're looking to continue. Once that bullish sentiment is looking to finish, what are we going to do? We're going to go and sell. It's that simple. We're buying now. In a couple days, next week, maybe we're going to look to sell. Once we sell, after that sell, we're going to look to buy. After that buy, we're going to look to sell. And it's a repeated pattern. We sell, we buy, 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 we sell. It's the same thing over and over and over and over and over again. You just have to be able to identify those patterns, identify when the market is giving it up. That's all we did. And it's a simple pattern. This is only on price action. I'm just, like I said, I wanted to briefly speak about how to hawk snipe different pairs while you already got pretty much a hint, an alert that the market is actually going that direction. So what was my hint? Like I said, the dollar was already bearish, right? Again, this is 9:15. EU wasn't ready. I mean, AU wasn't ready at 9:15, right? So see, AU bearish while the dollar is being bearish. So I already knew something was up. Now I just had to wait because dollar's bearish, EU's bullish, GU's bullish, but AU still working this low. And that is how you want to spot opportunity. That's exactly what it is. It's spotting an opportunity. This was working the low while the other pairs gave you that hint that we're bullish. The majors are bullish. EUG, we're bullish. While the DXY said we're bearish. All you had to do is find the opportunity, which was AU. We're going to look at Ndd USD as well, just to talk about same thing. So that is another major pair. Again, what do we got here? This was the low of the day. Market retraced 50, came back, couldn't take it out. 8 o'clock gave you a bullish railroad track. So that could have been an entry. Missed this. This bullish engulfing candlestick could have been an entry. And there's you have your bullish run on. There's that bullish run on. After what? Being so bearish, market has to give us that reversal. Midweek reversal was identified on the dollar. Now we just let the majors do its thing. This was the low of the day right here. Wicks, try hit it, wicked it at the end of the day and it shifted away from it, right? Now we get sellers involved to see this double bottom, I mean, excuse me, double top. Sellers get involved, they start selling. the bait. We buy after they just baited them in. They bait the sellers. London, 3:15, create the low of the day. 7:30, 8 o'clock, try to go towards it, but couldn't. That's enough as you're getting. So a buy here. Right, buy here. Stop loss there. That's 24 pip in this range. To get what? What did you get by the end of the day? Kidding me? 130 pips. It's great risk to reward. Every day. Every day, great risk to reward. Nice 20 pips. That's 24. Just do 20, right? 20 is what we do, which is on every trade. Just like that. That's the type of setups you want to take. Now, obviously, this wouldn't be your first target. First target is the high of the day, right? So your first target, you're looking at 50 pips. 50 pips gets hit. Second target is 100 pips. 100 pips gets hit as well. Now let's go look to the left why this got hit. Okay. This sellers have their stop loss, previous range, previous high, which is right there. Once the market runs through this high, he's gonna keep running. So that's what it is. He right here, there's the run, and then he's gonna keep running those seller stop loss. And this is the run. And it's the same thing with AU. It's the same thing with GU. Sellers, like again, he's gonna run these sellers stop losses that are above the range. Same thing with GU. People that sold this range, and this high. Now we gotta run it. This is the run of the stop losses. Run through those stop losses. Running through those stop losses. Now what you're going to be waiting for is little retracement and try to buy the same pattern. You want this same bad boy to occur in every major pair. In EU, you want this same shit to happen. In GU, you want this same shit to happen here. In AU, you want this same shit to happen. It might not do a retracement because he worked the low so much, so he might do a straightaway. And the straightaway is this, just going straight away from the low of the day where he doesn't need to retrace. He doesn't need to do this. He'll just go straight away from the low. So that's a possibility. But that's what you want to be looking for, is this pattern on a bullish cycle to continue going to the upside. On a bearish cycle, you would be looking for the exact same opposite. Nice M pattern. Here we go, bearish cycle. I don't even have to show you late UJ and USD-CHF created it. USD-CHF and UJ. USD-JPY. Boom. Okay, so this is a whole bunch of old drawing. Boom. All right, so USD-CHF. Bearish, as we saw the dollar. So this double topped, right? What do we have? Now that we have that bias, we're looking for double tops at the high of the day. So right there, the high of the day gets created, shifts away, a little bit of consolidation, and then hit the high one more time. Look at how induced he did that. Look at this, inducing buyers to buy, hit the high, don't take it out, now we sell. That's exactly the pattern that I'm talking about. A nice M formation at the high, double top. Look at that sell-off. Beautiful. How many pips is that? 300? Shit. 300 pips sell-off. USD JPY. Same exact shit. High of the day. Gets hit. Doesn't take it out. USD CHF. A nice better pattern because this is a 3-candle evening star. So there's your sell. sell right here, stop loss at the high, maximize your trade. At the end of the day, you get 280 pips. So this is the setup. M formation pattern, beautiful, beautiful M sell came along for that sell-off. Same thing with USD CHF. Beautiful. You're looking at a sell in this range because he's already so engulfed. You want to anticipate this candle to close engulf. You don't want to sell here. See, now that's a sucker's trade. You don't want to sell right here. You don't. So much room for a retracement. You know, this is so much room. That's 100 pips. From there to there, that's 100 pips. So it's so much room. So in this essence, I just miss it. I don't even take it. That's just discipline, right? That's just discipline of missed the setup, wasn't available, wasn't prepared, and that's what you got to do. The more disciplined you are like this, the more you'll be prepared to catch these opportunities and not let them go to waste. Because who the hell wants to let 300 plus pips go to waste in one single fucking day? Nobody, right? And who's saying that this was gonna happen, right? How do we know that there was no USD CHF news? There was nothing for this to happen besides being prepared for the opportunity. And look, you're looking for 50 pips, your TP1, and you just got 300 pips at the end of the day. And these are the type of setup you want to take. And then just from hindsight, you can see this is also a head and shoulders pattern. This is left shoulder, your head gets double topped, right shoulder is lower than your left shoulder. That's all a head and shoulders is high, higher high, lower high. Boom, that's all it is. All it is. High, higher high, which is the head, and then we got a lower high, which double tops 9 out of 10 times, if not 10 out of 10 times. The right shoulder double tops all the time. So you get, that's what you're getting. On an inverted, that's what you're getting. Exactly what you want to take. The second leg all day, every day. Second leg all day, every day. Second leg all day, every day. That's what you want to be taking. That's the move. So I just wanted to give you guys a little rundown. Hope I opened your mind. Hope you learned something new. But definitely, if one trade is already dishing out the pips, go ahead and do a rundown. See what pair hasn't left the station yet to see if you can capitalize on that opportunity. But nonetheless, you guys got any questions, let me know in the comment sections. You guys want to follow, you guys want to join the Discord chat, be in these trades, follow just what I'm doing, telling you guys what to capitalize, what trades to get in, how to see the moves coming in before they came in, and catching some pips. Let me know. IWCFX. It's a good day to have a good day. Hope you guys learned something new, and I'll hit you guys up with the next video. Have a good one.